And I'm going to read you one from wolfstreet.com, Wolf Richter's site. You know, again, we're watching China. What did Lindsay's friend back in the day? Watch China. China's the big one. Watch China. China's the big one. And now we're talking about launching trade wars against them and tariffs and all this stuff, right? And they don't want to export. Not they don't want to. They won't. The government says we cannot export gold. Again, I'm pretty sure it was China. I know we were talking the other day about India. As a matter of fact, maybe I should do a little search just to make sure. China doesn't export gold. I want to make sure I'm clear on that. Just that way, was it China? Was it India? China net imported these 5 trends. Australia exported. Mysterious behind China's demand. Pretty sure I read the one from China, and then the next day was India. They don't allow it. They weren't allowing exports or something. Anyways, I'm pretty certain. I'm going to say maybe 95% to be safe here. China is importing with both hands gold, and the gold that they do produce from their own mines in their country, they of course keep. If that's incorrect, someone let me know in the comment section, but I'm pretty sure that's the case. So speaking of that kind of stuff, U.S. asset bubbles crack as frantic China is now restricting outbound investments. Now that's interesting. What happens to prices when the biggest reckless buyer walks away? China's State Council has issued guidelines on what Chinese companies can and cannot acquire overseas. The purpose is to promote healthy growth of overseas investment and prevent risks. Or do they just want to make sure their people stay invested in China? Keep the money back here. Who knows? These risks would be that the $18 trillion of Chinese corporate debt will balloon further, though much of this debt is already going bad, and that it will blow up, triggering a spectacular financial crisis. This is to be avoided. So Chinese companies have been given priorities, and their efforts to invest in overseas commercial real estate, such as office towers and apartment buildings, in hotels and in Hollywood, will be axed. What's on? The guideline intends to drive the output of China's products, technology, and services, and deepen cooperation with countries involved in the Belt and Road Initiative. The government will support eligible Chinese companies to make overseas investment and join in the construction of projects in the Belt and Road Initiative. So let me guess. On a quote-unquote eligible Chinese company is probably one of their club members. You little guys, nah, you got to keep your stuff inside the country. Okay, me Chinese, me take money, me go Bitcoin, have some honey with my honey. Get some honey? I don't know. It just came to my mind. It was horrible. Chinese, no problem. We'll get invested in Ant shares, which is now Neo coin. There'll be another one. They'll jump into that one. Okay, you guys go invest overseas. No problem. We got this. These enterprises should take the lead to export China's superior technology and equipment, upgrade the nation's research and manufacturing ability, and make up the shortage of energy and resources through prudent cooperation in oil, gas, and other resources. That was what's on. What's off? Other investments will be restricted, particularly those against the peaceful development, win-win cooperation, and China's macro control policies. These policies are now being implemented to dodge this spectacular financial crisis. Among those outbound investments and acquisitions that will be restricted and that directly impact U.S. markets and valuations are real estate, hotels, and entertainment. Yeah, what was the first one again? Real estate. Interesting choice, huh? There have already been examples of big deals in the U.S. in these 3 categories that got scuttled or that succeeded, and the Chinese acquirer is now being pushed to unload the property because Chinese authorities have been putting pressure on their state-owned banks to curtail lending to fund these overseas acquisition binges at peak prices by Chinese conglomerates. It says here are just a few. Real estate. Now, first of all, let me say this. Do you remember the webbot talking about, and I mentioned to everybody at the time, hey, if you see this, email me. Like, don't forget, like, just keep this in the back of our minds. Email me if you see one of these stories. And that story is Chinese person, company, whatever, buying up all this real estate, big Chinese government. Hey, stop that. You're not eligible. You're not on the eligible list, so don't do that. Okay. They do it anyways. New people do it, whatever it is. China says, we told you guys not to do that. You weren't eligible. Now we're going to go get the property and we're going to own it. And we're going to send our official over there to claim the property. And it might be in the US, it could be in Canada, it could be wherever. So the webbot was saying, look for stories where the Chinese government official, somebody goes, and even if they don't physically go there, you hear the news that the government contacted them. They now own the house on their behalf, whatever, because the person who owned it is a Chinese citizen and they broke the law in China. Therefore, we now own this property. That's the kind of story we're going to hear, according to the webbot at some point. When I see this happening, and I'm reading this today, boy, it sure looks like they're heading that direction, doesn't it? So it says, here's just a few. Real estate. In April 2016, Li Eco, a Chinese company that had surged out of nowhere, bought Yahoo's 49 acres of land in Santa Clara, Silicon Valley for $250 million. Le Eco, that's odd. Chinese company. Now, Le Eco sounds to me a Frenchman's got this one. So maybe it's Lee, young Lee. So maybe it's Li Eco. We're going with Li Eco. Okay? Li Eco was going to build its global headquarters on it and hire 12,000 people. Earlier this year, Li Eco scuttled those plans and pulled back from the U.S. after China's state-owned banks had refused to lend it more money. It is now trying to unload assets, including this particular property. Hotels. Anbang efforts in September 2016 to acquire Starwood hotels and resorts worldwide fell apart. In June this year, its chairman was detained by the Chinese government. Wow. And then we have entertainment. In March this year, Eldridge Industries said that it had terminated its agreement, made in November, to sell its Dick Clark Productions, the company behind the Golden Globes telecast, to China's Dalian Wanda Group for $1 billion because Wanda had failed to honor its contractual obligations. The state-owned banks had turned off the spigot. This comes after Wanda had bought movie producer Legendary Entertainment for a white-hot price of $3.5 billion. Wanda, under pressure from Chinese authorities, has since been unloading a number of Chinese properties. And by the way, speaking of the whole Hollywood thing here, movies, wasn't it quite a while ago, the webbot talked about Hollywood's kind of sort of moving to China, but not really them moving there. China just kind of buying it up, starting their own thing, and then all the actors and Hollywood folks, or wannabes even, we're going over to China because that's kind of the new Hollywood. That's where we can get hired. I'm not going to go so far as to say I've seen that happening yet, but again, this was it right here. That's them starting it. China outbound M&A targeting U.S. companies has plunged 65% so far this year compared to the same period last year, according to Dialogic, amid growing regulatory scrutiny. Last year, Chinese companies made $65.2 billion in acquisitions in the U.S., including HNA's acquisition of 25% of Hilton worldwide. Since then, regulatory agencies have been reviewing and rejecting an increasing number of transactions, Dialogic said. This is an effort to stem capital flight and depreciation of the yuan. There was also more intense scrutiny in the U.S., particularly by the Committee on Foreign Investment, which is concerned that Chinese investments may threaten national security. I think I'd probably put that pretty high up there. When a foreign country that's kind of becoming the new superpower and you're on your way out is buying up a bunch of stuff, and the likes of Hillary Clinton and some of those folk helping along the way, like they tried with the Bundy Ranch stuff. This little Chinese backroom deal that they were trying to get accomplished that came out finally. But Yeah, I'd say that's kind of a high concern, national security concern. You don't want what could be a potential enemy or just another superpower buying up a bunch of stuff in your country. I mean, yeah, I'll buy that one. How big of a deal is this Chinese crackdown on outbound investments for the U.S.? Chinese firms have acquired $17 billion of just commercial real estate, such as office and apartment towers, over the past 2 years in the U.S., and it was concentrated in just a few trophy cities. In Manhattan, Chinese entities accounted for half of the commercial real estate purchases in the second quarter. This includes the $2.2 billion purchase in May of the 45-story office tower at 245 Park Avenue. In terms of funding new real estate projects, China ranked #1 among foreign investors in U.S. commercial real estate in 2016, according to Cushman & Wakefield. In 2016 alone, China invested $19 billion in commercial real estate projects, with the top 3 targets being Manhattan, the San Francisco Bay Area, and Los Angeles. Can you imagine they come in here, buy up all this property, and then you and me, us sorry schmucks, are paying rent to the Chinese on our own effing property, on our own effing land. This land's not your land. This land's not my land. From California to the New York Islands. Notice how I didn't say this land is your land. This land is mine. This land's not your land. This land's not my land. I had to throw the Jason 4 style in there. Jason 4 style DJs. Chinese money is transforming LA's skyline, revitalizing neighborhoods, and inspiring additional investment. The report gushed in March concerning LA downtown super high-end condo towers Metropolis, the forthcoming ocean-wide plaza, and the other skyscraper mega project funded with Chinese money that have been announced, including a complex with 3 towers by Shanghai-based development firm Shenglong Group. One of the towers will be among the tallest in the city. Rumors have been swirling for months about how Chinese authorities are strangling the credit flow to the big conglomerates to curtail their growth and reckless borrowing and speculation, and perhaps force them to shrink. One of the big issues was that these companies were borrowing heavily to buy at the peak of the market after asset prices have run up into the stratosphere for the past 8 years. Chinese authorities are worried about the debt in a financial crisis, and they're taking steps to get a grip on the risks. Now we have the official pronouncements instead of rumors. For valuations in the U.S., this is a killer. China has been a big buyer and a big developer, and prices did not matter. The higher the better, it seemed, on the principle that this is just borrowed money. As the money flow from China is succumbing to strangulation by the Chinese authorities, other big reckless buyers, supported by reckless state-owned banks, may not readily materialize, and then the music stops. Chinese authorities have a lot of tools to keep their debt construct propped up. The upside is fake stability. The downside is too ugly to contemplate. Read. So when will China's debt bubble finally blow up? Another article of his. And I'm just thinking too, if we just add up, and I don't even know what the number is, by the way, Chinese assets in the U.S., like in complete full total, not just real estate, not like everything. I don't know what the number is, but I'm just going to throw one out there for the heck of it. $1 trillion. $1 trillion worth of assets. And then all of a sudden we have this little tit for tat going on with China and Donald Trump's, I'm not playing that. We're going to do this, economic sanctions or tax import duty, all the stuff he's doing. And it devastates, or they pass some law in Congress, of course he passes it, which essentially hurts anything Chinese over here. And now the freaking Chinese are furious. Right? You could almost see something like that potentially happening. Although I don't know that Congress would be putting a bill forward. I think it would be some kind of, the power invested in me as the president. I'm able to do this, and he does it. Kind of like he just did recently. On Monday morning, I'm going to, slap China with whatever it was, this economic sanctions or tariff, whatever the hell he said last Monday. But, so yeah, You see all this stuff happening, and it's just still amazing. I drive to work every day. It's the same drive it is. Nothing really bad happening anywhere. Everything's going to keep going the way it is. But I know better than that, and I think you do too. It ain't going to keep going the way it is. And the feds, federal government, and the Federal Reserve doing everything they can to prop up this entire worldwide debt bubble. And because they're doing so, that's why we have these high property prices, insanely high stock market, way overvalued. Because as he said, the kind of like the other one, the upside is fake stability and the downside is too ugly to contemplate. That's for China, but you could kind of apply that here to us. The downside is everything resets, deflation, start over. But not until they're ready. Right now, it's inflate the heck out of everything. And I think they may let it go later this year, like we keep talking about, September, And maybe not. Hey, we're waiting for it. We've been waiting for it. Maybe it won't happen. Right? But if it does, the Donald Trump will be the fall guy. As we've discussed before he even stepped foot into office. He will be the fall guy for this market going down. And if they let it draw out close to the next election cycle, which will be 3 years from now, that's a long time to be dealing with this, and a lot of egg on his face, and rotten tomatoes, so to speak, thrown at him by the people. This was his fault. I always thought, well, maybe they'll wait till later. And I shouldn't say I always thought that. There's a few scenarios I've actually come up with, to tell you the truth, but I really did think, though, it would make more sense as election time comes. Hey, look, this guy's been horrible, and the market's now falling out with this guy. You really want to vote for Donald Trump? Vote for me. I'll fix everything. Hillary or whoever comes up. And we say, yeah, man, this guy was horrible, And then again, we have the Webbot coming out here shortly. October timeframe. Donald Trump. Bad news. Hopefully, it's an absolute miss. Let me just say that again. Anyways, on to the next one. I think the final one. Take care.